Welcome to SilverStreak. How's it going, all my fellow silver bugs, gold bugs, precious metal, numismatic investors, and enthusiasts? As we enter the final lap in the first turn of the into the elections, if you will, um, we are facing many different things, and we're looking at a lot of current events, if you will, that are happening before us. And I think we all know we're heading into this economic crisis. It's very obvious that the U.S. dollar is going to take a dive. It's not going to be able to hold up to the up and coming inflation, and just there's things that are going to happen that are out there, and there's reasons why this is all going to happen. And I think we're going to find out why. But there's a lot of things in front of us that we have to sift through to get to that why. We have this massive amount of information that's being declassified right now in front of us. That's going to show how these bankers and government officials, how they acted like, or even the information, the CIA and the FBI, they were all tied into this, and it's like a big crime family. So the distractions are out there to keep us, from worrying so much about the economic crisis. And I think there's going to be a point where, yeah, we see some people arrested. There is going to be law and order. But in the meantime, this is all being done to wake a lot of people up. It's going to be very traumatic for a lot of people. So as we head into this final lap of the elections, and I only think we're in turn one. I think we just entered turn one, and it's looking pretty. It's scary. It's not an easy road to go down. There's going to be, we know. Look what's happened with the pandemic and all the nonsense with all the rioting and everything else. So we know we're heading down a very unstable path. Our economy is looking good on paper, but we know when we go out the door, and we talk to our neighbors, and we look at what's in front of us, it's not so great. And one thing that I've taken the time to do in this moment of pause, if you will, as we are all kind of reevaluating our lives, as the banks reevaluate our currencies and everything else that gets reevaluated, I took the time to learn about, trying to learn about economics and money and everything else that they never taught us in school. I could never figure out why they were always trying to teach us, how to figure out the volume of a circle or the half of a triangle. It doesn't make any sense, right? I mean, you use it if you're a carpenter or something like that, but for the most part, none of us ever use that math. Why didn't they teach us this right here, the velocity of money and how our currency works? Because when you look at the velocity of money and what the velocity of money is doing, we're in trouble. We're in trouble. The velocity of money is slowing down. It's been on the decline for many years, and we are maybe entering a greater point of recession than we ever have seen before. So there are a lot of things happening that are going to make people look for the safe haven, how to avoid being caught up in the collapse, how to be caught up in all the nonsense, and make sure you have what you need. So having a plan right now is very important. How to protect your assets, how to transfer your wealth. Right now they're saying it's a great time to reinvent yourself as far as how you view yourself. And I think it's true. I think there's a lot of truth in that. So anyway, I think there is a bigger plan. I think we know who is running the show right now. And I think a lot of the plan, I think the second part of the plan, I think the second turn, if you will, or maybe the third turn, who knows. But I think a bigger part of the plan rides on the next round of stimulus. I've been listening to a couple of videos towards the end of this week, and very interesting stuff that's happening. Learning about, the causes and effects of inflation and deflation and how that affects the dollar. We all know how that affects the dollar. It's correlation. It's inversely correlated to each other. The dollar falls, precious metals go up, and we see we see that aspect of it historically in the graphs. That's what we see. But historically, we are in a situation that we have never seen, and I think that kind of what I got out of the couple of videos that I watched, and we'll touch on those in a minute. But the Fed has taken their foot off the gas, so to say, and we are drifting towards insolvency. The United States is drifting towards insolvency, where our GDP, we won't even be able to make the payments on the interest of the debt that we owe to the Federal Reserve. So, with that being said, the Federal Reserve puts us in this 2% of inflation over an undisputed amount of time till it reaches stable ground. And the reason for that is, I just found this out, is because they cannot raise the interest rate. Their hands are tied because the debt is so large that any increase in the interest rate to stabilize the inflation will be insolvency. That's what we're looking at. So, with that being said, we can see inflation run through the roof when it takes off. If the stimulus gets cut, when the stimulus gets cut, because if we don't know it's coming, we just don't know how much of it's coming, and I think it's going to be fairly large. The Treasury usually sits on about $400 billion, and right now they're sitting on $3 trillion. So they're about to dump money. They're about to dump money on the people, but when are they going to do it? I think that it's going to be after the election, only because the administration, Donald Trump, wants to go into the election stable. They want to have a stable stock market, precious metals. They want all this stabilized and looking good. And it's because when he does pull the trigger on the stimulus, it's gonna cause inflation. And on the back door of that inflation, we're already seeing supply chain shock. We're already because of we're not exporting as much, which is affecting the trade deficit, and it's making it look like there is a bigger trade issue than there is, but really some of it's based on our exports. But we are also not importing as much because some of the countries that we import from are having issues still, as well as here at home, as we see large companies like Smithfield that are owned by China shut down, and we lose major meat packing. That's a major meat packer. It's a bunch of plants, nationwide that just shut down. So, with all this being said, as we see, we're going to see inflation of necessities. We're going to see deflation of non-necessity items. So people are going to start, minding their P's and Q's on how they spend their money. How they spend that next round of stimulus is going to be, I think it's going to be handled a little different than everybody who took the first round of stimulus and went and bought toys. I think the second round of stimulus is going to be like, okay, we are going to have to prep for post-election America. So with that being said, and kind of what I learned today or yesterday, was that we could be looking at stagflation or hyper-stagflation. And there's a little picture here that kind of depicts a very good representation of how you get stagflation. And yeah, I think we're going to run into hyper-stagflation, and that basically is when the market is going one way, south, and and the prices are going the other way, north. So, and I think that's what we're going to see. I think the next round of stimulus is going to trigger some of this stagflation. And with that, we also we take a look at our gold and silver prices, and we saw pretty much the what the trend has been. It's been up and down a little bit, kind of bumping around. Just when you look at it day in and day out and where it finishes, it's it's kind of flat. Other than we get these little I don't know if you'd even call them dips. They really don't dip that much. I thought there'd be a little bit more movement. I thought they'd find a little bit more of a bottom. I thought there was a little more movement down, but I guess they didn't. And I guess this is where they're going to go. And now we are going to see the U.S. Mint. I think I saw that is going to take the Silver Eagles, and you ain't going to be able to buy a Silver Eagle for under $60. I think they're going to go to $67. So we are going to see, and I think that's supposed to happen in like 4 days or 5 days. So I just saw that on one of the other channels. And when this happens, silver is going to start to move. Silver is so undervalued. I hate to see anybody just get left behind, because when it does take off, I think it's going to start to move. I think this Silver Eagle is going to $60, $67, I think it was what they said. I think that has the potential to move the rest of the silver to $50. And it's funny, that's where they said it was going to end out the year. And I bet you some of us looking at this flatlined sort of market the last couple of weeks, where it's just been up or down $1 or $2 or $2, and it always kind of finishes out the week in the same spot. I think that's going to change. I think that's going to change here in the next 5 days. And who knows, maybe it's to quell some of the volume, because we know a lot of people are going towards silver because it's so undervalued. Or maybe it's because of the volume. Maybe they need to. Maybe it's to start the volume is pushing out some of the manipulation, and they realize that they are undervalued. Because think about what it takes to make that coin. There's no way they'd turn out that coin in pure silver for $30. So it is way undervalued. I suggest everybody get out there and go buy some Silver Eagles this weekend, because come Monday morning, they're going to be a different price. So I think we're going to see the market start to move. If silver goes up, I think you're going to see gold go up. And it's funny, because we're going to see maybe a little anomaly with the U.S. dollar, as all three gain strength together going into the election. And I do believe that would be the part of the plan, is to have a nice, stable economy running into the election, and then there'll be a correction. After the election, I think we'll see a larger correction, and that initial correction is going to come in the form of inflation, which is going to lead to the stagflation. It's going to lead to insolvency. The idea here is to kill the Federal Reserve. The idea here is to show the American people that not only is the two-party politics toxic, but the Federal Reserve taxing us and indebting us to no end, never, ever getting out of debt, is toxic to the American people. So I think a great video to watch is the video I watched yesterday, which was David Brady, the Insolvency Endgame, on Palisade Radio. He touched on some great points. He was spot on about the pullback that we've seen last month. I love listening to him talk. I can listen to him all day. He's got one of them great British or English accents that you just love, and he's smart as a whip. So go to this video. I'll put a link below. Listen to this. It is a very powerful podcast, and he's a very in-tune guy. He knows what he's talking about. And if you go to this podcast and listen to it, and you come away with what I came away with it, you're going to be in a much better place. You're going to be much better able to process what's happening, and able to make a plan for yourself to protect yourself, because that's what we need to do. We all need to think about protecting ourselves. I guess that's where I'm at this morning. And if you guys haven't checked out the Money's Metal Exchange, give them a look. Give them a try. They're really good over there. They're voted #1 in America, best exchange in America. I use them all the time. They've been great. They've been nice enough to set me up with a promo code for SilverStreak. It's a one-time promo. You get a free ½ ounce of silver with your first purchase of $100 or more. And with that, I'm going to say thank you for listening to SilverStreak.